Not a whole lot. I'm currently, I was looking for jobs before this because I want to find a part-time job. So just looking for that, but
Now, what kind of job do you want to find? What do you want to do?
anything, anything that makes money.
Anything that makes money. I
Yep.
think you've known me long enough that I won't accept that as an answer because I hate the thought of people going to a job that they hate just for money.
See, I've done my fair share in food service for like 5 years, so I'd rather not do that or retail, but I feel like that's the only thing that will work with my schedule. So I'm
Customer service is definitely something you would be really strong in. Um,
not.
but the holiday season of customer service
I
sounds
know,
really
I
like
know.
a nightmare.
Right.
All right. Well, then we'll just pray that God puts you exactly where He wants you, and
Amen.
even if
Yes,
even if it's a place that you hate, you can use business as ministry philosophy to say, why is God surrounding me with
exactly.
these people?
Yep.
How did chapter 6 go? Did you get into it?
Yeah, it went okay. I didn't submit it yet just because there's a lot that I'm like, I'm not sure if that's right or I'm not sure if I did it the correct way.
Oh,
But some of them, like the hints didn't really help just because it didn't go as far as the question asked. There were just a couple of those, but
oh, interesting. Do you remember what numbers they are? We can see if we can cover them today, or I can make a video when we're done.
I can look. I'll get
We can
back to
just
you.
see, and then I can, if we can do it during class, that might be valuable for everybody.
Okay.
All right. Nobody put their camera on. I'm trying to remember, like where I live, it's always sunny and bright, but you guys are into the doldrums of like it's dark and is it still snowing there or is it done?
I think it's supposed to snow this weekend, maybe. It kind of snowed yesterday.
I'm sorry for that. There's nothing okay about that. All right. Well, today what I want to do, good morning, everybody. Today what I want to do is I went through and I was reading all of your halfway through the semester papers, and I realized we just still need a little bit of a break from Connect Work, right? Like Connect Work is great and it's giving you some fundamentals, but it also is exhausting and tiring, and maybe it's time to put a real world spin on all this stuff. So what I did is for this week's assignment, coming up into fall break, I'm going to ask you to start writing your final project just so we can get that out of the way and you're not buried with it at the end of the semester, but we can actually start to dissect it. And this final project, I love it. Students don't like it because it forces you to, I don't know, students don't hate it, but it forces you to think about accounting in a real world standpoint, which means there's no longer the right answers. It's you actually having to analyze a business. So I'm going to try to be really crystal clear about how I lay that out today. And then I'll get it up on YouTube so that you can keep on going back to it and find out exactly what I'm looking for in it. And what I did is just gave you a good starting point for what I want you guys to get into next week. Um, and then we'll go over any questions that you have on the chapter 6, and we can pull them right up on the screen and go through them together. Does that sound fair to everybody? All right. The excitement in this room is contagious. Mr. Gaman, how are you doing today?
You know, fighting a cold off.
Yeah, this is the point of the semester that we just have to power through, because this is also like the busiest time of all of your lives, and we're trying to make you do work on top of it.
Yep.
All right. So hopefully this assignment makes lots of sense. What I want you to do as you're thinking about this, I'm going to ask you guys to analyze a real life business. I know I ask you to do this in every class, but I won't ever stop doing that. So get something in your mind of something that you can visit, right? Something that you can visit and do an analysis of so that you can take those stuff from Connect and turn it into an understanding of how it actually really functions in the real world. So what I want to make sure that you guys understand is I don't want you to pick a big, huge corporation. I don't even want you to pick a business that does more than $10 million in sales, because that is just not, it's too much, right? I want you to pick a simple, small business like Bigby or McDonald's or Subway or, even a gas station would be hard. A simple, small business so that we can start to get a fundamental concept of this. Does that make sense to everybody? So I want you to be able to walk into the business and see how many people are working at the business. I want you to be able to see what product they're selling, and not just be a ton of products, but just what product are they selling. So think about something that you could visit that's not a big, huge business, but something that you could realistically visualize the sales for, and that'll help you to make sense of it as I'm describing the final project. Does that sound fair? Monty, are you excited? All right.
Not really, because I wasn't able to hear exactly what you said and what we need to do.
You know what the beautiful part about this is? It's all going to be on YouTube, so you can go back and visit it as many times as you want. What I said today, Hun, is just that I'm going to give you guys another break from Connect this week. It's fall break, and in the spirit of realizing that fall break is because we all desperately need it, I'm giving you an assignment that's outside of Connect that will just start getting you a feel for your final project, so we can get a whole bunch of that done before the finals week, so you're not even more stressed out than you already will be during finals week. So let me pull up on my screen, and I'm just going to talk through it, and let's make sure that I answer all of your guys' questions as we go through. Not a bad time to get a pen and paper out and take some notes. Okay, guys? All right. Let me make this a little bit bigger so you guys can see my screen well. Are you guys able to read along well with that? Hey, Noah, what a treat. It's like every time I see you, it's like getting a Christmas present. Good job, man. Welcome to class. All right, so far in accounting, we have learned how to do it by using McGraw-Hill Connect, which is valuable for the academic portion of things, but it's hard to translate that into what in the world does an accountant actually do at work. Right? Like some of you are saying, I want to be an accountant. And I think there's still a lot of you that think that that means preparing taxes and that's it. Right? So the start of this is accounting is the process of taking all the financial statements. Right? So that means all of the receipts when you make a sale, all of the things that you buy in order to get products to sell. So the purchase orders, all of the expenses. So it's a list of everything that you had to buy in order to run your business. And then the taxes that you sell, the money that goes out, the money that you keep for yourself, those are all parts of what an accountant has to file away into a system where they can better understand exactly how to tell the story of their business. Once an accountant does all of those things, they create financial statements, right? They create the 4 major financial statements that we continue to see week after week after week. The first one is the balance sheet, right? The accountant creates the balance sheet, which says, today on October 31st, here's what I own. Here's a list of all my assets. Here's what I owe to people. Here's a list of all my liabilities. I owe payroll. I owe vendors. I owe taxes. I owe all of this money. And then there's equity. Now we talk about what that's worth. This is an important concept here. The statement of owner equity is the statement that tells the owner what is the claim that they have on the assets. That means out of all those assets that are listed, which one does the owner get to say, those are mine, and get to keep them? Right? Does that help you guys make sense of it a little bit more? And the owner's claim on the assets, what do they get to keep? So when we prepare an income statement, the income statement takes a period of time. It says for the month of October, here's everything we sold, here's all the expenses that we had, and here's the profit. Here's what's left over. That's what the income statement does. It's not a snapshot in time like the balance sheet where it says today on this day, here's what we have. The income statement says over the last period of time. So in QuickBooks, most of the time you look at it on a monthly basis. How were sales this month? How were sales this year? That's what the function of the income statement is. The statement of owner equity just says, here's a list of what is the claim that the owner has on the assets, right? You're working the business, you're owning the business. At some point, you have to get paid from the business. What can you take out of the business? That's what the statement of owner equity does. And the statement of cash flows, which I don't know that we've gotten too deep into. So quickly and simply, it's just tracking where all the cash goes. Right? When you run a business, you'll realize that keeping track of your cash is really complex, and having a statement that does it makes your life a lot easier, because money is constantly flowing in and out of your business throughout the day. So for your final, pick a small local business that you can analyze. I'll use Bigby as the example, just because we all can visualize what they sell, and we can all visualize what it looks like inside of a coffee shop, right? So I'm going to use that for the example. So find something that will cross over well to that. So put your shoes in if you got the internship as the accountant at Bigby, and they said, we've never kept track of anything before. We were just running our business, praying that everything goes right. Now we need you to hire Noah, the most handsome accounting intern of all time, to help us put our books in order. The first thing that you need to do is to say, let's give an overview of our business. This is just as simply as saying, this is Bigby of Wyoming, Michigan. Their competitors are Starbucks and the gas station coffee. They've been in business for this amount of time. Here's how many employees they have. Here's me proving to Professor DeYoung that I've actually thought about this business and visited it and analyzed it to say, here's what I see from that business. So here's what I want as the start of this. Give an overview of the business. This is, who are the competitors? What do they sell? How old is the business? Etc. All right. Here's the part where students sometimes get frustrated, so I want to make sure that we nip this in the bud now. Make an estimate of the monthly and annual sales, the annual sales for this business. All right, Noah, since you're my smartest student, how in the world would we figure out the monthly sales at Bigby Coffee? How in the world can we do that?
Like an estimate of it?
Yeah.
You could probably just look it up on Google. It'll probably tell you.
That would be a good starting point, but I know that the Google, if you went to Google, I should never call it the Google because it makes me sound super old. If you went to Google and said the annual sales for Bigby, they would give you the annual sales for the whole corporation. That is not good for our business. You could type into Google, if you're doing a franchise like McDonald's, you could type into Google the average sales for a Chick-fil-A franchise. That might give you a start, right? The average sales for a McDonald's franchise. If you want to be super old school with it, and this is what I would even recommend to you, go sit in the coffee shop and ask the manager, how many cups of coffee do you sell? Johan, if we asked the manager how many cups of coffee they sold every day, how could we figure out what the monthly revenue would be?
Wait, what was the question?
Yeah, you're going to learn, and I'm loving this. If we figured out that Bigby Coffee in Wyoming, Michigan sells 200 cups of coffee every day, how would we be able to figure out what their monthly sales would be? So we've got 200.
By multiplying 200 times the day in the month, days in the month.
This is why I love you, Johan. You're smart, you're handsome, and you're doing a good job. 200 cups of coffee. How much does a cup of coffee cost?
I don't know.
They've got all those fancy drinks, so I'm gonna guess
$2. No, $4, $3.
And this is why students hate this assignment. There's not a right answer, right? I can't tell you You're absolutely wrong. I can just tell you to give me a smart analysis of a real life business. Because Johan, if you decided that this was going to be $3.50, I would love you the same. The reality is I need you to change your perspective to just saying, just give me the answers and tell me exactly what you're looking for, into I'm going to sit here and I'm going to look at that menu. And I'm going to say, Big B sells $6 drinks, $4 drinks, and $2 drinks. Based on that, I'm going to say, you know what, the average cup of coffee or the average sale for Big B is $4. This is also a really cool time to go in and say, you know what, guys, I would like to ask the manager, what's the average transaction for a customer? Think about how smart that would make you feel as, hey, I'm a business student at the #1 business program in all of Wyoming, Michigan. That's our claim to fame right now. Hey, I'm a business student at the #1 business program in all of Wyoming, Michigan, and I have some questions for you. How many transactions do you do per day? Even the low-level employees probably have a good idea of what that would be. So number of transactions per day times the average dollar amount per transaction. If we think about Big B Coffee, Amaya, what do people buy when they go to Big B Coffee?
Coffee.
Amen. Sometimes they buy bagels. I think they sell bagels. I mean, I live in the jungle, so I don't know a lot about these businesses anymore. They sell bagels. They sell muffins. They sell gift cards. They sell all of these things, right? Drew, how many dollars do you think the average transaction at Big B might be? Do you think my $4 number is close?
It's probably around 6, 7.
See? Drew's smarter than me, so we're going to put 6 down. So now instead of 200 cups of coffee, we're saying 200 transactions per day. This really helps us put a real life spin on accounting, doesn't it? We have never challenged our brains to think this way about accounting yet. But now we're making ourselves feel like we can analyze a real business. So we've got 200 transactions per day. How many hours a day is Big B open? I think I'm going to guess they're open from 6 a.m. until 10 p.m. Yeah, 6 p.m. until 10 p.m. That would give us how many hours? They're open 16 hours a day. $16 hours per day. How many customers can they see per hour? The answer to anybody that's smart to all questions is it depends, right? You want to say it depends. But I think, oh, somebody's talking. Talk to me. I'm going to call on Dylan. Dylan DeVries.
I have no idea. I just joined.
That's my boy. Good job. Nice honesty. Let's say, Dylan DeVries, that you are at Big B and you're sitting there at a table and you're saying, I'm from the #1 business program in all of Wyoming, Michigan, and I'm here to analyze the business. What we're talking about is how many people go to the cash register at Big B per hour. That's how we're going to figure out how many sales they do in a month. So we go there and we say, we're open 16 hours a day. And you know what? I bet we see 20 people per day or per hour. Does that make sense to you guys? Is that a reach, or do you think we're close, Jen?
I'm not sure. I feel like because there's the slow times and there's the busy times. So I feel like 20 on a busy, maybe.
I love this, and it helps us to remember how an understanding of accounting can help us be better business people. right? You're keeping track of the numbers of the business so that you know how many people you need to put at the customer service window at each time of the day, right? At 7 a.m., Bigby is packed, and they might do 50 transactions an hour. At 2 p.m., when it's only people from Grace hanging out by the fire, they might do 4. So I'm going to say that we do an average of 20 transactions.
Yeah, and I would agree with you, like, especially, like, I think sometimes it depends on the weather. Like, right now, it's getting cold, and yesterday we got snow. So I would assume that right now they're probably making good money because people need hot stuff to drink, you know?
Yes, Amani, yes. And the pumpkin spice world is out, which means sales are going to go up. And all of this is different based on the time of the year. In July, Bigby's not packed. In December, you guys are living in the frozen tundra over there. Everybody's at Bigby. It's the only way to survive, right? It's an accountant's job to analyze this kind of stuff and tell the story of the business. So if one day that Bigby franchise goes up for sale, you can say, you know what? We make a lot of money October, November, December, January, February, March, and then we go to our slow season. It's our job as business students to be able to think through how much does this business sell for a month or for a year. That's why this assignment is frustrating, because I don't know the right answers, right? But I'll be able to tell if you're way off, right? If you tell me that Bigby Coffee in Wyoming, Michigan sells $10 million worth of coffee every year, I'm going to call your bluff, and I'm going to give you a C plus instead of an A, and I want to give you guys A's. If you do this work to estimate how much they sell, I'm going to be really happy that I've taught you not only the Connect way of looking at the world, but the actual real life way an accountant should look at the world. Does that make sense? All right. So let's call it, and I'll pull up my calculator here because we're accountants and we have to keep a calculator close to us. So now we're going to figure out the sales per month for Bigby Coffee, right? So we're going to say they see 20 people an hour times 16 hours of being open. That means we do 320 transactions per day. Everybody with me so far? That's just 16 hours per day, 20 people on average buying coffee per hour equals 320 transactions per day. And if the average transaction is $6, we would be able to safely say that Bigby does 320 transactions at an average of $6 per day. That's $1,920 worth of sales per day. You guys with me? Have you ever thought about a business in this manner before? I'm like a real business professor. Look at this. It's happening, Joseph. How many days is Bigby open? Are they open 20 or are they open 7 days a week? I would guess so. We can bash them with Bible bullets later about being open on Sunday, but for now we're just analyzing their business. Right? So Noah, what's the calculation I got to do now? 1920 times what?
7.
I'm going to pretend that you broke up, and so you can give me a new answer if we're looking for the monthly.
Oh, you said monthly? Oh, I thought you said weekly. I'm sorry. You would times it by however many days are in the month, which is sorry.
I just like to tease you because I know that you'll still love me afterwards. 1920 times $31 or 31 days. That means the average sales would be $59,000, right? $59,520 per month. This is all new to us, isn't it? This is new, but man, is it valuable to get a real world understanding of business. Because now we can understand how many people we can hire. Now we can understand if we can afford to have high-speed internet. Now we can decide if we have enough money to repaint the business or fix the bathrooms. It all starts with that sales number. And that's why you guys have to pick a simple business for this. You have to pick a simple business like Big B or McDonald's, because this transaction, if you're going into a massive factory that sells tons and tons of stuff, you're not at the point in your degree program to be able to do that, right? It's just we haven't analyzed big businesses yet. In accounting too, we get into this. So for all of you at this point, I need you to stay on task and say, we're going to pick something small and easy and simple that we can all understand. So if Big B is selling $59,520, $59,520 per month. Anybody lost right now, or do we got this? The people that have their cameras on are watching closely, which makes me so happy. Like, I wish I would have done this at the beginning to help you guys make this all real. So thank you for that. Those of you that don't have the cameras on, I'm just assuming that you're not here, and I'm going to mark you off. I'm not really going to do that, but I sure do love to see your faces, right? Like, I'm probably the least handsome person, and I put my camera on the whole time. Tommy, I'm talking to you, Mr. Hill. I'm waiting to see that pretty face. All right. So now we can actually say that Big B sells $59,520 per month. Can everybody get to this point with their focused business analysis? I think that we can, right? All right. What are the expenses at Big B Coffee? Johan, what's one thing that Big B Coffee has to spend money on in order to make that amount of sales?
On like coffee stuff. Like
I think you're saying cost of goods sold, and you just made my day. I'm not going to put that in the expenses because it goes in the revenue line. Cost of goods sold. Right? When we talked about this last week and we started to get introduced to this in chapter 5, they are purchasing coffee beans. They're purchasing muffins to sell. There's a cost of goods sold to this. How could we make an estimate on the actual cost of goods sold for Big B Coffee? Since I'm not all that smart, but I'm good with technology, I would type into Google the average cost of goods sold at a restaurant. I will be happy with you guys just putting in a number of 30% here. And some of you students are like, it's just coffee, it's got to be lower. I'm fine with you putting in a number of 20% there because it's coffee and bagels. It's cheap, right? Drew, you get to be the final call on this one. What do you want our cost of goods sold for Big B Coffee to be based on your insight and analysis and God-given smarts?
I don't know.
You can say 20%, 25%, or 30%.
Let's just go with 25.
I think that's the perfect answer. Cost of goods sold is 25%. How do we figure out, based on that number, pulling our calculator back out, what do we have to multiply by? Times what?
0.25.
I think that was that Imani?
Yeah.
If I needed any more reasons to tell you you're my favorite student. Our cost of goods sold is $14,880. and I will share this document with you, but I sure know that the people that are taking notes are definitely getting the most benefit out of our time together today. Now we have a cost of goods sold from Johan. He's getting triple bonus points today for that great analysis. Brianna, what else do we spend money on in order to sell that $59,000 worth of goods and services at Big B Coffee every month?
Well, I think like the biggest expense would be employees.
Yes.
Baristas who make the coffee. So
Labor.
mhm.
All right. Now let's do some analysis. Let's really think about this like we're the accountants. How much does it cost to employ people at Big B Coffee? Right? Does anybody work at Big B Coffee, or anybody have an understanding of how much per hour they make? I'm going to go with Amaya. Amaya, how much do you think they pay their employees hourly at Big B Coffee?
I don't know, probably like 10.25.
I think that's a great estimate. How many people are working at Big B during the day? Usually when I go in there, I see 3 people behind the counter. Would you guys all agree with me there? So let's pick on somebody without their camera on just to make sure they're actually there. Jordan Scott. Are you with us today?
Yo, yo.
Yo, yo, put that camera on. I want to see your face while we talk through this problem together. All right. Jordan, if we have 3 people behind the counter at Big B Coffee and they're making $10.25 per hour, and we're open for how many hours?
A day?
Yep. How many hours per day are we open?
I would say 16.
Yes. So we get our calculator out. What transactions do we have to do here? We have to say I've got 3 people. Actually, let's figure out the cost for each person, right? So in order to have 3 people there, we have $10.25 that we are paying out per person times 16 hours. That means each day we're spending $164 per employee that is there for the full day. Everybody with me? Does that make sense? All right, I think those notes will make sense to you guys, right? So now we're going to say it's $164 per day per employee times 3 people that are always there. That gives us a labor cost of $492 per day just to staff that place. Now I know that doesn't count benefits and holidays and bonuses and tuition reimbursement programs, but this is accounting 1. Right? We're not going to try to be heroes. We're going to start the process of being able to analyze a business. So every single day, out of the $1,900 that we sell, right? $1,900 per day is what we sell. 492 of it is employee costs. All right, what else do we spend money on? Let's pick on Mr. Hill. Mr. Hill, what else does it cost to run a Big B Coffee in Michigan? What are some of the other expenses that we have? And for those of you that are worried that I'm going to call on you next, type into Google the average expenses for a small business.
Utilities.
Yes, Mr. Hill. We've got utilities. What kind of utilities do we have at,
Well, you need like the things that the baristas are gonna be working on, like the coffee things, and then you got the light bill, you got the rent, all that type of stuff.
electric, rent, internet, right? That's why people go to Bigby, to sit there on their computers and drink coffee and have good internet. Electric, rent, internet, water. What else?
I mean, you got your daily or your weekly supply of your, the drinks that you're gonna need.
Right, which is really smart, but that's going to get tied back into this cost of goods sold, right? All the coffee grounds we buy, all the bagels, all the muffins, they all fall into this line to make it easier. But you nailed it. Utilities, electric, rent, internet, water. Who typed into Google average cost or average expenses for a business and found something else that we should put in here? What about insurance? They all have to have insurance, right?
Taxes?
Yes.
They like their.
Oh, I heard somebody start to say something.
They have like their website costs.
I'm going to call this technology, right? Because if it's Bigby Coffee, they are paying the mothership, the home office, a certain amount of money every month to maintain their website and their social media presence, right? Which brings us up to marketing and advertising. How much does a Bigby Coffee spend on marketing and advertising? Somebody tell me it depends. It depends.
It depends.
It depends on what's left at the end of the month, right? This is an interesting way to think backwards and actually learn accounting, isn't it? Because what did you guys do right here? As we wrote all these things out, what did you guys just do? You actually wrote the chart of accounts for a Bigby Coffee, like a real accountant. And that way, every time the insurance bill comes in, you file it in the insurance category in the chart of accounts so that you have a good idea of what your liabilities are when you make the balance sheet. Nod your head if you just finally realize why in the world we're studying what we're studying. All right? Every time your tax bill comes in, you file it in the chart of accounts under taxes so that you can tell the story of how much it costs to run this business. Now, you guys might get frustrated here because now you have to actually type into Google and research average cost of utilities in Wyoming, Michigan, right? And just get an idea, right? There is no right or wrong answer. The points that I give you are based on your ability to do analysis and use the internet to research things like the average cost of marketing for a coffee shop. If you tell me that the average cost of marketing every month at Bigby is $250, I'm going to believe you, and I'm not going to yell at you, and I'm not going to mark you off. But I would be surprised if your expenses are $80,000 a month, because that means your Bigby Coffee would be out of business, right? That would mean that Bigby Coffee is completely out of business. You have to leave a little bit of money left over once you pay all those expenses in order to do a good analysis of it. Make sense? Let's go back up here and we'll keep on talking. So for your final, give me an estimate of what the monthly and annual sales would be. How would we figure out annual sales if we just have our $59,520 per month? How in the world can we figure out the annual sales? I heard somebody say multiply it by 12.
Yeah, she said that.
Who is that? Is that your guest star that you have in class with us today?
No, she is one of your students.
Sarah.
Oh, Miss Paga. How do I say your last name, Sarah?
Pega.
Pega.
Yep.
If I knew that you were friends with Imani, I would have been much nicer to you this semester. I'm sorry.
It's all good.
But I'm giving you extra bonus points for this.
Nice.
59,520 times 12. That means we're guessing this Bigby coffee brings in $714,240 every year. You guys, this is pretty close to what they do. This is a pretty accurate analysis just based on us chatting. When I used to run paint stores, the average paint store for Sherwin-Williams was selling around $1.2 million per year, right? The average Subway sells about $1 million a year. The average McDonald's sells about $2 million a year. The average Chick-fil-A sells $4 million a year. How do I know that? Because I just type it into Google and ask it, and it tells me. That's your job, right? Like, you can't rely on some crazy bald guy in the middle of the jungle for all the answers. That's what Google's for. I can teach you how to analyze it and think through it, but at the end of the day, it's going to be your responsibility to check these numbers out. All right, so we have annual sales 714,240. Can everybody do this on their own so far, or should we stop and ask some questions about how we came up with what we did? And I feel like we're having a really productive class today. All right, so the next part about your final project, part 1, is make an estimate of what the expenses are. We've already done that, so I'll carry these over. Now it's create a chart of accounts. Creative chart of accounts, you guys actually already did this, right? You already did this by explaining the things that you will run into. Let's type into Google a second. Chart of accounts for a coffee shop. Look at all these accounting-like things that actually we just put into real-world terminology. This kind of stuff makes you want to never go into accounting, right? A page like this makes you think accounting is impossible and no one should do it. What I want you guys to realize is this is all simple stuff that you don't have to have in your analysis, right? The more detailed your chart of accounts are, the better job you will do of telling the story of your business. The better job you will do of being able to give this to a manager and say, here's our business, now I want you to manage it. So let's look at this. Petty cash. How much cash do you have if somebody needs to run out and buy more coffee cups? How much money is in your checking account? How much money is in your account that you pay your employees from? How much money do you have in savings? Skip special account. It's not important for this. Do you have investments in the money market? Not important for this. Accounts receivable. If a Grace Christian University said every month I want to be able to go in and buy coffee on an account, that means I'm not going to come in with cash. You're going to keep track of everything that I buy, and at the end of the month you're going to send me a bill. That's what accounts receivable is. Right? Nod your head if you're with me. Most Bigby coffees don't have this. If you want coffee, pay in cash. We're not going to keep track of it separately. Do we want to keep this on ours? Probably not. Other receivables. Are there other people that owe us money? I don't think for Bigby Coffee or McDonald's you have to ever deal with this. Allowance for doubtful accounts. And a doubtful account means somebody that's not going to pay their bill. Again, Bigby Coffee, you don't have to worry about this. If you were analyzing Sherwin-Williams paint stores, these are really critical categories because people are coming in and they're buying goods and services on an account. That means at the end of every month, they have to pay their bill. For Bigby Coffee, these are not important. Supplies inventory, is this important? Absolutely it is. How many bagels? How many bags of coffee? How many how many, well, that's pretty simple, right? How many bagels, how many cups, how many bags of coffee do we have? That's what's in our inventory. What's in our inventory? This is why we keep things simple, right? For Big B Coffee and McDonald's, you don't carry that much stuff in inventory, but you could take a guess at how many burger patties are in the back or how many cups of coffee are there. Go into our fixed assets. Do we have office furniture at Big B? Do we have fixed assets that we bought in order to run our business at Big B Coffee? Mr. Hill said, it's the coffee machines, the espresso makers, the tables, the chairs. Those are the fixed assets at Big B Coffee. Nod your head if you're with me. And in watching our YouTube video, I realized how annoying I am by the amount of times I say nod your head if you're with me, but it's better than waiting for you guys to all unmute and then tell me if you have a question. So that's why I do it, and that's also why I like to see you guys on camera. Is so that way if you want to stop, you can go, whoa, 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 stop. I don't understand what a fixed asset is. Or you can nod your head and say, yeah, I'm with you. I got that. So Big B Coffee has furniture. They have equipment. They have the coffee makers. I doubt they have a delivery vehicle, but if you guys are analyzing Jet's Pizza, I bet Jet's Pizza makes their delivery drivers use their own cars. But
Yes,
maybe
they
they have
do.
a vehicle.
Yes,
Right?
they do.
Anything else that depreciates? We ran into the depreciating assets a couple of chapters ago, right? If they did own a vehicle, they can't hold it at book value forever. They have to depreciate it over time to accurately reflect what it's actually worth. Then we can skip all this other stuff, right? For accounting 1, I'm not asking you to be a hero and do all these accumulated depreciation things. Is there money in deposits? Organizational costs, skip it. If it doesn't make sense to you, skip it. How about our liabilities? Accounts payable. Who do we owe money to, right? Most of the time in a big franchise system like Big B Coffee or McDonald's, your accounts payable are all to the franchise company, right? McDonald's sells all of the McDonald's companies their own beef, right? They don't go out to a million different vendors. They just go to McDonald's and say, I need more beef. I need more burger buns. I need more of this. And the McDonald's corporation gives them everything that they need. I'm guessing most Big B cashiers don't have a 401k or health insurance. And I'm not asking you guys to tackle that in this paper. Long-term liabilities, notes payable, land payable, equipment payable. If you add that in there, I'm going to be really excited about it because you tackled something. But if you don't have any long-term liabilities in your final project, I don't care. That's not necessarily important for this stage of learning accounting. And see how this all starts to make sense once we put it into the lens of what we actually have? So these expenses, we went through expenses, but this would also tell a really valuable story, right? Advertising expense. Amortization expense. Let's stop here. What does amortization mean? You know I'm going to call on you, Brianna, because you work at a bank. And it's okay not to know because you're in school in accounting 1.
I actually don't know what it means.
So now I get to be a professor to you.
Yeah, there you go.
Amortization means just taking your expense and breaking it down over monthly payments or annual payments. So if I buy a house, most of the time I don't just write a check for the house. I amortize a loan over the lifespan of the loan. That just means amortization. That means if I buy a house for $100,000 and I'm going to pay it off in 30 years, that loan is amortized or paid off over an amount of time. Do I need to see this in your Big B or your final project analysis? No. But auto expenses, bad debt expenses, bank fees, when cash goes missing out of the till, those are all actually things that you might want to have a category for in your filing system so that you can tell a good story about your business. I can actually witness connections being made inside of your brains about the connect work into the real world. And I'm just so thrilled about it. And that's the goal of this assignment. It's not to get the right answer. It's to think about this in a different way that makes sense to you in the real world. So look at all these other things. Utilities expense, wages expense, travel expense. Brianna just went to a training at Fifth Third Bank, and they had to buy coffee and snacks for everybody at the training, and they had to pay people to drive their own cars to the training, most likely.
Yep.
Right? That all would get filed under training expense and travel expense. Why is that important? Because next year, if we say to ourselves, hey, should we spend money on training our baristas to do better work? We have a category for that where we use it. All right. Does everybody feel confident that they can type in chart of accounts for my focus business and get a better understanding of this and not be scared of stuff that looks like this anymore? We're not allowed to be scared of this because it's all pretty simple. Everybody with me?
I just have a question. I was
questions from students. Mr. Hill, what do you got?
Oh, so like for the first beginning of class, I was outside helping move a wood stove. So I don't know. I'm kind of confused on what we're doing.
Okay, so I'm actually just going through the assignment that's going to be due this week. And the beautiful part about doing accounting totally online like this is your YouTube video will be up on YouTube in about, usually I get them up with that night, and you guys can go back through and watch everything that you missed.
Okay.
So now let's go back to the requirements of. So write a chart of accounts. Do you guys think that you could write a chart of accounts now based on what I just showed you? Sounds like a yes. And I'm going to say chart of accounts needs a minimum 20 categories. Does that sound fair? I hope it does, because if you can't find 20 categories after pulling up a document like this, we're all in big trouble, right? Pick the 20 that you can actually mentally absorb and put those into your paper. Sound fair? Noah Johnson's happy, so that's all I really care about. Let's move on. Now, this is the part where you are going to struggle unless you really want to ask good questions now. Create 20 transactions that would really happen in this business. Use problems from the book in chapter 5 to create those. Noah, give us our first one. What is an actual transaction that an accountant would have to look at in order to file it away correctly?
Say that one more time. I'm sorry, I couldn't hear you.
What's one of the transactions that we would have to write down in our paper that would really happen in this business, that would actually hit an accountant's desk?
Like, what do you mean by transaction exactly?
I'll start with a few of them first.
Okay.
On October 5th, we sold Bigby, sold $1,250 worth of coffee. That's it. You're done with one of them.
Okay.
On October 12th, we paid our electric bill. On October 15th, we paid our employees. See what we just did? We just turned Connect into the real world. That's why I make you guys do this assignment. Everybody with me? Jen, what's another one we could put on there?
We could do like the water bill.
Yes. You guys think that you guys can do this assignment in 1 week's time without any real drama or tension? We just did almost all of this in one hour. And it's all recorded for you guys to be able to go back and do it again. So that's going to be your assignment this week, is to just get started. The most important part is actually pick a business that you can wrap your mind around. I used to give this assignment at the very end of school year, and a whole bunch of people would pick a business that was way too big, like Dick's Sporting Goods. It's a great business if you work there, but it's way too hard to analyze like this. Because how many transactions a day does Dick's do? 500? How many employees work at Dick's? Way more than I want to try and figure out in this assignment. That's why we go to a small local business to pull this off. And every year I have a couple of people do the Kahawa Cafe, and I'm never mad at them. Right? Kahawa is a good one to sit and do your homework and analyze the business. You just have to be correct and be able to transfer it into this kind of language. Sound fair, everybody? We feeling good? We feeling confident? All right, then I'm going to put this onto Blackboard so you have all of the notes that I made so you can follow along with the YouTube video if you need a refresher. Sound fair? Any questions before we close this part of our chat and move on to something else?
When's this due?
So the first part of this is going to be due next week, Thursday. I know it's fall break Thursday, Friday, so I'm not going to be meeting with you, and I'm not going to be giving you a really challenging assignment for the following week. I'm going to give you guys kind of a layup for Accounting Chapter 7. Accounting Chapter 7 is accounting information systems, and I'm not even going to give you any of your workbook assignments. It's just going to be go and connect, find the answers, like what we do in business law. Simple stuff, read the chapter, tell me the answers, multiple choice questions, and I'm only going to give you like 20 of them because I want to be cool. So the next week's assignment is going to be a layup that you're not going to need a Zoom conference call to understand. Everybody with me? All right. So, but for this week, all I want you to do is get started on the finals. So while you guys are on fall break, I can read through your finals and make sure you have chosen a business that is possible for you to achieve success on your final project. And then part 2 of the final project is going to be actually going through and creating a journal in real accounting world where you're working on these same transactions and putting them into credit and debit form. It's not ultra challenging. It's just putting them in credit or debit form so that what you do in Connect actually bridges the gap between real world. Johan, who's checking in? He's got a good sense of style. I want to talk with him. All right.
You want to talk to him?
I don't know. Should I? What do you think? It's your call.
No, he's fine. He's doing homework.
All right, man. So now I'm going to open up. You guys got into chapter 6. I saw that I think there was like 8 of you that are already finished with the assignment, and the numbers were really good. Jen said that there was a couple of them that were confusing. So now's the time in the where you guys can say to me which ones do we want to work on. Amani, what do you have? Oh, you're muted, honey.
I'm just talking to her, like what number that I'm working on.
Yeah.
Okay. Good deal. Do you guys want me to run through any of them today, or do you want to use the rest of this time to work on your assignment and ask me stuff individually?
I would need help, like do some review on them, because that was one of the questions that asked, like, oh, I don't remember. It's like, I will give the explanation. It's like when the seller is the one who is paying the shipping, they call it somehow, and then when is the person selling the thing that is paying for the shipping.
All right, then I am going to share the screen again. And we're going to start to look at our chapter 6 assignment. So let's go into some of the more challenging ones at the end of the assignment, because I'm sure that's probably where we're limping along, right? Well, I have you guys all in front of me and we're chatting and talking. Are these valuable to you, these videos?
Mm-hmm.
Yeah, okay. I know that they don't give you points, but I also know that they're a great place to go back for information if you need it when you're doing the assignment. So here's one, questions 9 through 17, right? This is the one that it is pretty brutal to have to power through, right? Oh, never mind. Those are just videos. Those are easy.
Can we do number 42?
Number 42. Yes, we can. All right, and now's a good time to get your cell phone out and snap pictures of this because the answers will be at the bottom of the page. I don't want you guys just to get the answers. I want you to internalize it, but I'm also been a college student that had lots of things going on. So we have to look through this company. And this is what we did last week, right? January 1, you're walking around the warehouse. You've got 140 units in the warehouse. We bought them at $6 a piece. So far, everybody's good. We made sales of 100 units. That means we only have 60 of them, or we only have 40 units left in the warehouse. And we sold them at $15 a piece. So we bought them for 6, we sold them at 15. So far, we're really happy. We go back because now we only have 40 in the warehouse and we purchase 60 more. Now we've got 100 in the warehouse and we make a sale of 80 more. We make a sale of 80 more, which means we only have 20 in the warehouse. So we go back and buy 180 of them. Why did we buy 180 of them? My guess it's because we got a really good deal on them, right? We went from buying 100 or having 140 units that cost us $66 a piece to buying 180 units at $4.50 a piece. So over time, we had 380 units move through our warehouse. They cost us a combined amount of money of $1,950. And during that month, we sold 180 of them at $15 a piece. Stop me right there if we have any more questions about this specific question or if that makes sense. All right.
I have a question.
Yes, Amani, go ahead, hon.
Okay, where does the 100 unit at $15 come from?
This is what we sold.
Okay, so will the problem tell us exactly what we sold, or we are the one who have to figure out how much we sold?
I believe that you're going to have to decipher this based on just this chart. Right, so this chart is, we have a warehouse full of, I'm not sure what product they tell us we're selling here. Mm-hmm. But we're going back through and you have to fill all these out. What's our beginning inventory if we have a specific identification? What's our inventory if we have a weighted average cost, which means we add them all together and divide them? What's our inventory if we go into the warehouse and we sell all the ones we bought first? When we make the sale, all the stuff that was in the warehouse first is what we go and pick up and sell to the customer. And here, what happens when a customer comes in and we go and pick out all of the things that we were most recently added to the warehouse? That's what we're doing. Somebody comes for a sale, we either go to the pile that came into our warehouse first or the pile that came into our warehouse last. So let's go through and look at this. If we're doing specific identification, it's simple because we're going and we're actually just picking out exactly what we had. So we could say 140 units, and this is where last week we talked about if these are all the red units, and somebody comes in and says, I want to buy 100 of the red units, we say, okay, that's the specific unit. The specific cost is $6 per unit. So our beginning inventory, we have 140. It cost us $6 a piece. The cost of goods sold on that is $840. All of those numbers are just taken directly from the problem, right? There's been nothing new we did except for just plug those into this automated inventory. So then we say, how much did we sell, right? How much did we sell throughout the entirety of the month? And I'm not sure why we have 125 units here. Hold on just one second. Oh, here we go. So determine the cost assignment to the ending inventory to the cost of goods sold using specific identification. For specific identification, the inventory consists of 200 units. 180 of the units are from the January 30 purchase. So stop right there, crawl up. The January 30 purchase is what we sold. So imagine in your minds that the customer said, I want the red ones. This is specific identification. That means we have to go to the pile of red units and specifically grab those. 5 of them are from the January 20th purchase. Crawl back up. The January 20th purchase, we know we bought those for $5, specifically identified. And 15 of them are from the beginning inventory, right? That's for this specific identification. When we click over to weighted average, things are different in the problem. When we go back to first in, first out, things are different on the problem, right? Everybody with me? Or did I lose anybody? Okay. So for our, let's see what your student view looks like a minute so I can see exactly what you guys see. And just somebody verify with a head nod that this is exactly what you guys see when you look at all this stuff. Yeah, okay. So we're going to 42, and this is what you guys see. The same chart that we need to plug in. And I know your numbers get scrambled. I do that on purpose just so you can't work together. You have to actually grasp the concepts. So specific ID, number of units. How many units do we have? Well, our beginning inventory number of units is what? 140 at 6, right? That makes sense to everybody? And just so I look like a smarter teacher, I'm going to open up a tab with the answers on it so I don't give you guys bad information. All right. So for you guys, beginning inventory, how many units do we have? Somebody shout it out.
$140.
Yes. 140. What's our cost per unit? $6, right? Cost of goods sold is done for us. Now, how many units did we sell? This information will come from this part of it right here. And we sold 100 units here and 180 units here. However, we have to think about what did we sell. We have to sell, how many units did we sell? So if we go back over here, we sold 125 units. Where did this number come from? 125 units of the $6 ones and 55 units of the $5 ones. How do we get that number?
Well, we only have 140 units at like the $6 price, and then we have 60 of them at the $5 price. So in order to like that, both those numbers equal 180. So we had to sell 125 of them at the $6 and then 55 at the $5, I believe.
Yes. Does everybody see where that came from? Okay, awesome. So we have to look at what do we have from our beginning inventory? What do we have left of the purchases that we have made on January 20th? And it looks like on the purchase we made on January 30th, we didn't touch any of them. So you're taking the 180 units from the January 30th, 5 from the January 20th, and 15 are from the beginning inventory. Everybody make sense? That means our ending inventory is how we go back and understand our sales. We go back into the warehouse at the end of the month and we see what's left, and we realize that all of the units that we have left are from this. So we don't take them out of the cost of goods sold because we didn't sell them. They're still in the warehouse. Nod your head if you're with me. Does that make sense to everybody? Okay. Now, I think you guys have a good feel for that one. We go into weighted average cost. Weighted average cost means what? We are actually going through and dividing everything we make and everything that we sell by the number of units, by the cost, in order to get one number for the average cost of everything in our warehouse. So far, so good? If we do this from your guys' perspective, and we go to the weighted average, we've got a beginning inventory of 140, cost of goods sold here, and now we've got to figure out our cost of goods sold for all of it. When we go back through weighted average cost, we sold 180 units, and we have an average cost of $5.13. How did we get that number? Look at right here. Right? This will help you guys make sense of it. And I'm not, at this point, like, I'd rather have this cemented into your heads than have you memorize it. So it's okay if you jot this down in your notes while we're talking. In order to understand the inventory for specific identification, we've got 180 units that we sold from the 450 pile. We've got 5 that we sold from the $5 pile. And we've got 15 that we sold from the $6 pile. There's our ending inventory. Weighted average cost, we had $1,950 that was purchased over 380 total units. And that gave us an average cost of $5.13 per unit. Does that make sense to everybody? All right. Now let's switch into our first in, first out. Here, remember, when we're making this sale, we have our inventory. That's what's left inside of our warehouse. 140 units that we paid $6 for. Somebody comes and says, I want to buy some of those. We go to the pile that we had first in our warehouse and we sell them those. Then we go out and buy more, but the prices went down. So how many units do we have left in our warehouse after this sale? Joseph, how many do we have left? We had 140, we sell 100. How many of those are left in our warehouse?
You should have 40 left, right?
We got 40 left. So now we have a pile of 40 units that we paid $6 for, and we go out and we buy more, and now we've got 2 piles. We've got a pile of stuff that we paid $6 for, and we've got a pile of stuff that we purchased for $5. Somebody comes in and says, I want to buy 80 units. Because we're doing this for first in, first out, somebody comes through and says, I want to buy 80 units. We go back in and we say, we have to finish out our inventory here. So how much is left from that inventory? And then we sell them the rest of these, but we keep whatever's left. So because we have 40 of these, we're going to sell them 40 of the units at $6, and we're going to sell them 40 of our units at $5. First in, first out. And I'm kind of doing this to the point where I don't just give you all the answers exactly, but give you enough ammunition to tackle the problem on your own. Not because I'm cruel and unusual, but because it's valuable for you guys to work through this on your own. So when we're looking at our beginning inventory, our purchases, and then our totals, that's where the value of this comes through. Last in, first out is the same animal, right? Somebody comes through and says, I want to buy 100 units. The first time that they buy 100 units, we take them all out of this inventory. Then we go out and buy more. Now, when somebody comes by to buy these last 80 units, we first pull from the pile that was there most recently. Then we go back and get the old stuff. Is everybody with me? All right. Any other questions about that specific problem, or do you have enough ammunition to tackle it on your own? All right. Guys, I'm going to stop the recording there. I think you have everything you need to get this assignment complete. Would you say that we're good? Are we still happy with the way that class is going? All right. So next week, tackle the Big B assignment. Think about business not from the McGraw-Hill Connect way, but from your own smart, God-given eyes and brains to figure it out on your own. If you have any questions, reach out to me individually. I appreciate you guys. I'm thankful that I get to be your teacher, and I'll see you not next week because it's fall break and you've earned it. So I'll see you in 2 weeks, but I'll be available between that time if you need anything at all. All right, guys. God bless.